Do you own a business and you're wondering where did the money go? It's frustrating when you review financial reports, but nothing stands out to explain why your bank balance is lower than you expected. So you assume you need to sell more, but the problem pops up again a month later. Sales increased, but there's no extra money to show for it. You're frustrated again and you're still wondering, where did the money go? Stay tuned. I'll share 3 ways to help you see where your money is hiding. But first, let's consider the possibility that we're not asking the right question. The question, where did the money go, implies that the right amount of money flowed into the business and some of the money is hiding or has been misplaced. But what if the right amount of money never flowed into the business because our prices were too low? Your company's only sustainable source of cash is from your customers based on the price you charge. If your prices do not include all of the cash flow commitments, the company will never have all the money needed to pay all of the bills that you encounter. Prices are often set by considering the cost that you see on the profit and loss statement, but there are other cash flow commitments that need to be considered. For example, the principal portion of loan payments. You need some cash to help you replenish inventory. You also need cash to help you pay bills on time. Sometimes your customers don't pay on time, but you still have a financial obligation to pay your bills on time. And yes, there is a cost of allowing your customers to buy today and pay later. And so that cost needs to be considered when you set your prices. We also need to consider the cost of using our assets. When it's time to replace your existing assets, your trucks, laptops, and tools, where will the money come from? Your prices today must include the cost of the assets so the company can save the money and have capital reserves when it's time to replace the asset. Keep in mind this money helps you maintain the current level of revenue. Your current revenue needs to cover the cost of the assets that are being used to deliver the service that generates the revenue. And also keep in mind that some costs of doing business are missing when you set your prices. And the 2 most common are owner's salary and income taxes. It's common to overlook these costs if your profit and loss statement is prepared based on the tax return. Depending on the tax structure of your business, these costs may not be tax deductible, but regardless of whether they're tax deductible or not, they require cash, so they must be considered when you set your prices. And if you don't, you will never have the money that you need so you can pay both of these financial obligations. Prices drive cash flow, and so it's important to include all cash flow commitments when you set your prices. The second way money may be hiding is your prices are not working. When was the last time you confirmed your prices are generating the profit that you planned? This is a simple activity where your bookkeeper connects the price that you charged to the profit. Think of your price as the plan. What you expect to generate money. And then your gross profit is the reality, what really happened. And you can ask your bookkeeper to compare the price that you charge to the actual cost of delivering the service. They can test 5 or 10 recent projects, so that way they can confirm that the price that you charged actually generated the profit that you planned. And if you find some projects that did not work the way you planned, you can dive a little bit deeper to identify why, so that way you can fix it. Some of the most common reasons why your gross profit might be lower than you expected is your team might be relying on discounts to close the sale, and that erodes profitability. You might have higher labor costs than you expected because of inefficiencies or mistakes or overtime, and you might have more material costs than you expected. And the last thing to consider is, have your customers actually paid? Have your customers been invoiced? I'm still shocked by the number of times I hear business owners and bookkeepers say, we're too busy to send the invoices, or we have not gotten around to calling the customers to collect money. There is a major disconnect in the system where resources have been invested in generating leads through the marketing process, closing the sale, and delivering the service. But you've got to create systems to actually finish that business cycle. You've got to take the time to send invoices and collect money. It must be consistent whether the business needs the money today or not. The bottom line is, the next time you wonder where did the money go, confirm the right amount of money flowed into your business by charging the right price, generating the profit that you planned, and also invoicing and collecting money on time. Thank you so much for watching. As always, if you've got a business finance question, please reach out. I'm happy to point you in the right direction.